Welcome back to Power Lunch here on NDTV Profit. As 2015 winds down, we, look at a whole host of trends in the year gone by. And of course, Karvy, Private Wealth, every year at this time of the year publishes a report on the trends as far as individual wealth in India are concerned. Yes, this is the India Wealth Report 2015 from Karvy Private Wealth, and we have Abhijit Bhave, CEO at Karvy Private Wealth, joining us this afternoon. Abhijit, thanks very much for joining us on NDTV Profit. This is Manvi here in the Delhi studio. Good to have you on the channel.
Thank you so much for inviting me.
So what are the key findings of the 2015 India Wealth Report?
So the key findings are that there's a major trend reversal this year. Till last year, the incremental allocation of wealth was going into physical assets, and by that I mean real estate, gold, diamonds, silver. This year, more money has gone into financial assets. So compared to last year, when 35% of money had gone into financial assets, this year it is 54%. Point number one. Point number two is, and a very key trend is that equity has become the king. So equity has overtaken fixed deposits as the number one destination for investments in financial assets. Clearly, the point coming out is that more and more Indians are putting money in financial assets, and they are preferring equity over the other asset classes.
Okay, I'm just trying to understand how you arrive at some of this. I mean, what are the sources for those who are watching for the first time and they want to understand the basis for this India Wealth Report 2015? In summary, can you just outline your approach?
Yeah, so that's a very, very important question, because data accuracy is very important. I'm very happy to tell you that entire report has been done in-house. We don't outsource our report. We take data from only dependable sources, which include sources like RBI, SEBI. And just to talk of number crunching, for example, if you're looking at gold projections, we look at the current stock of gold, then we look at the net incremental sales of gold. Then for projections, for example, we look at the price of gold that is going to be there over the next 5 years, and then we look at the foreign exchange rate that is going to happen.
Okay.
So we not only have a complete slice and dice of what has happened in the last year, but we also make projections for the next 5 years.
Okay, and we'll talk about those projections in a moment. But now that you've explained the way you approach the data for this report, let's go to the major trend reversal. And I was actually going to ask you this question a little later on in our conversation, saying, were there any misses or any changes or deviations in 2015 compared to what you'd projected in your last report in 2014? And you've acknowledged upfront that this huge switch to financial products or financial assets is in a sense unanticipated. What does that really mean? I mean, the fact that there are more holding equity, holding their wealth in the form of equity, what does that mean on the ground?
Okay, so I'll answer the question in two parts. One is, I'm very happy to tell you that the number that has come out on financial assets and equity is very similar to the number that we had projected. And the second point is, and it's a larger point, if you look at where Indians are investing vis-a-vis the globe, the investments are in line on debt, they are in line on real estate. But the investments in equity are much lower compared to where people have invested globally. And the investments in alternate assets are much higher, because we Indians love gold. So what we are projecting is that this trend is going to reverse, and people are going to actually not invest in gold, and people are going to invest more in equity. The investments in debt and real estate would remain at the same percentages.
Okay, you talked about gold, and the government's really been pondering that issue as well. I'm curious to understand from an academic perspective where you put these government schemes, the monetization schemes, etc. Would you classify them, next year as part of the gold umbrella, the gold chunk?
So, just to explain to you, in this report, we only look at individual holdings, and physical gold is separate, and ETFs are separate. So, the government schemes are very welcome. But when I meet investors, gold is actually for a lot of people emotional purchase.
Sure.
So there is some, what should I say, uncertainty about how much of that money is actually going to go into it. But talking of next year, we will count them separately.
Okay. Now let's talk about the projections that you're making for the next couple of years.
Yeah.
And more importantly, how has individual wealth in India fared or grown compared to the rest of the world?
Somebody was mentioning this to me, that whose shirt is the least dirtiest if you look at the countries, and the answer is US and India. Across the globe, US is doing well, India is doing well. If you look at exact growth numbers, globally the wealth has grown by 9% for HNIs. In India it has grown by 23%. And we all know that China and India are the countries where we are churning the maximum number of new HNIs. We expect this to continue. In fact, we expect India to overtake China in the days to come in terms of not only HNI numbers but also HNI wealth.
Are you going to stick your neck out and say by when you expect India to overtake?
In the next 2-3 years, actually.
Okay. What about
because the India growth story... Sorry, please go on.
No, please complete the point. You said 2-3 years India could overtake China.
In terms of HNI wealth growth, see, India growth story is here to stay, and we expect that to continue over the next 5 years. In fact, in this report, we make projections for the next 5 years, and we are seeing the numbers going up.
Okay. What about distribution? Has the base also expanded, or is it just about, concentration of wealth, further concentration of wealth? Give me a sense on what your latest report throws up in terms of distribution of wealth at the HNI level and concentration of wealth.
So if you look at this from an economics perspective, there's this term called Gini coefficient, and India is not very great in terms of wealth distribution between the haves and the have-nots. So HNIs are growing richer, and you have the poor growing poorer, unfortunately. But in the middle, we are seeing that number going up. Not only that, we are also seeing that young people, novio-rich people are actually getting savvier in terms of investments, and they are looking away from the traditional form of investments. So if you look at the next 5 years, we are actually projecting high growth rates, not only for equity, but also for alternative investments.
One final number from you, which we haven't discussed yet, which is for the next 5 years, what is the India wealth growth figure that you're putting out? And are there any risks to it?
Okay. So for the next 5 years, we are looking at India. The Indian individual wealth today is around 280 lakh crores. We are expecting that to go up by 11% to 475 lakh crores. The major growth is happening in financial assets, which are doubling in the next 5 years. Physical assets are growing by around 4.4. Just one interesting tidbit here, because there were a lot of questions on this. Diamonds, we are expecting them to grow really fast. So though physical assets are not really growing, we are expecting diamonds to grow by nearly 20% per annum. On financial assets, we are expecting a direct equity growth by 19.4%. So equity remains number one and grows to around 25% overall within the asset class. Number two will be fixed deposits. But key point is doubling of financial assets to 326 lakh crores over the next 5 years. So a lot of money to be made and a lot of money to be achieved.
Well, we're going to leave it at that. Abhijit Bhave, thanks very much for joining us this afternoon on NDTV Profit with the Wealth Report from Karvy Private Wealth for 2015. Here's wishing you a happy holiday season and all the best for 2016 from the entire team at NDTV Profit. We're going to take a quick break after that upbeat conversation. Well, some somber news as another session of Parliament